Hey Ricky, John Hanson. I think we finally were able to figure this video and audio thing out. Yesterday I had some issues with the audio, so I think we're ready to roll. This is the third video I've done today, so we should be good. Either way, I wanted to, thank you again for the opportunity to help you and Robin, and had a really good conversation with you yesterday, and really enjoyed a conversation with Robin initially last week. And I just want to put together this slideshow so you can see everything in black and white. We're right in Garden City. You can have all my personal information here. And basically, we are a privately held mortgage bank, and this enables us to, give a little bit better deals than our competitors like the larger banks, and we also close a lot faster than them as well. So, moving forward, the first thing I like to do is make sure that our goals are aligned. I want to make sure that I have exactly what you guys are looking for. I know that we are obviously looking to save money. I mean, everybody I speak to is. It's just a matter of, are they looking for, term and interest reduction where the savings are there, or are they looking for a lower payment, or in your case, they're looking at a combination of paying off credit card debt, combining both loans, and obviously getting a lower rate and saving money. So I think that you're going to really enjoy these options that we have here. And, primarily after our conversation, I think there's really two options. The first is going to be the 25-year. The second is going to be the 20-year. So let me just briefly explain what I have here. Again, I don't have your credit report, so I'm going off the assumption of a 700 credit score. If it's a little less than that, it may affect the rate slightly. I'm talking an eighth, so nothing extravagant. So this will be pretty close to accurate, but I also want to get you credit simply because I want to see what credit card debts you have in there, and what the monthly payments are, what the rates are, and then we can really, kind of break down what the total savings will be on a month-to-month basis. But again, this is pretty general and just something for you guys to see with your own two eyes. So you have a first mortgage right around $330,000. The interest rate is 5.375. Now that was initially a 30-year loan, but you have 21 years left. That's what this 21 is. The second mortgage is a fixed second mortgage with TD Bank at 6.75, and I think Robin had told me you had about 26 years left on that. Now, comparing apples to apples, this is principal and interest only. Your escrows are going to remain the same whether you're, with your current lender or the new lender. Regardless, they're going to remain the same. So, again, your total payment, principal and interest only, is $3,084 a month. Now, here's the two options we have. With the $40,000 cash out, with your closing costs rolled into the loan, here's your new rate. It's going to be 4.875%, and here's your new payment of $3,000 and change. So, this is on a 25-year term. I'm going to show you how we can actually pay the home off faster in the next couple of slides. But this kind of will, correct me if I'm wrong, your main goal is to pay off as much credit card debt as we can. And again, if the appraisal comes in for more than $650, we're going on the assumption of $650. We'll be able to increase this loan amount and give you even more cash. Option two is the 20-year term. You're looking at a payment of $33.60, so you can see the difference here of about $360 a month. But again, considering, after our conversation yesterday, Ricky, that you want to pay this home off fast. You don't want to go backwards into a 30-year loan, which makes total sense. And again, I'm going to show you how we can even pay it off faster. So it looks like either way you decide to go, by paying off the credit card debt, I'm assuming you're probably going to save close to $1,000 a month. Again, just an assumption. So even though your payment's jumping up a little less than $300 a month, you are reducing the term of the loan, and more importantly, you're paying off all that credit card debt and freeing up that additional cash flow. So here's what the biweekly plan is, what I had mentioned to you yesterday. What a biweekly plan is simply this. If your payment is $33.60 a month, you'd pay half of that amount every 2 weeks. It's an automatic debit. And yes, I believe there is a small fee, but if you look at the annual amount that you're going to pay, it may be $70 or maybe $80, whatever the amount is, taking into account how much money you're actually going to save in interest, it's more than worth it. And in some banks, you can use it as a tax write-off at the end of the year. So again, it's only $70, $80, whatever it is. But here's my point. On a 25-year loan, a 520 loan at 4.8, your payments are this, okay? Your biweekly payment is half of that, 1501. So what's going to happen is by having those payments come out every 2 weeks over the course of a year, you make generally one or two extra payments, and all of that funds gets applied towards your principal. So you're looking at a loan on a 25-year term paid off in under 22. You're looking at, here's the really cool part, the effective rate of interest, which is also known as the real interest rate, the real rate of interest you pay over these 21 and change years, is going to be 4.22%. Okay, that's pretty darn good, and it gets even better with the 20-year. Same thing, 20-year payment, 3360, paid off in 20 years on a traditional normal loan without doing a biweekly. But by doing the biweekly, you're paying half of that every 2 weeks. Again, an automatic debit. The home is paid off in less than 18 years. Okay, and look at this. Your real rate of interest is about 4%. Now, another thing to consider is if you were actually to pay or take some of those monthly savings, okay, let's say we're going to save, I would say $500-600 a month, probably more than that, but that's being conservative. That additional $500 or $600 in cash flow, if you really took all of that money and applied it towards your principal, as I discussed yesterday, we'd pay this loan off in less than 15 years. Actually, probably about 12 years. If you're interested in that concept, I can work up those options just to kind of fine-tune this and really show you, okay, if we take all of our monthly savings, apply it towards our principal, and just keep our payments the same as they are now, we could pay our home off in less than 15 years. So it's a big step up from going from 21 years left and 26 years left, which you currently have, and the amount of money that you're saving. I mean, this is just interest, okay? This payment savings is what you need to look at. On a 20-year term, by paying the home off an additional 2.5 years earlier, you're looking at this. Almost $40,000 in interest that you're paying. You times that by the amount of years you're saving close to $100,000 worth of payments. So a real easy way to explain it is if you took a new loan, a 20-year loan or a 25-year loan, the amount of money that you're borrowing generally is going to be paid back. On a 30-year, it's about 3 times. On a 25-year, it's about 2.5, and on a 20-year, it's about 2 times. So if you take a loan out for, say, 520, you're almost paying back $1 million if you include all the interest. Okay, so a way to eliminate and save some of that interest rather than basically throwing money out the window by giving it to your new lender, you're saving this $100,000 over the next 17 years. Okay, same thing here with the 25. I think personally the 20 years best for you, but again, it's a decision you have to make. As you can see, the savings are just absolutely phenomenal. And if we take that $400 or $500 or whatever the amount is that we're saving, I mean, these numbers are going to double. I mean, you're going to pay the home off in, less than 15 years, and the interest you're going to save is going to be north of $200,000. And that's really an important question that I like to ask a lot of my newer clients is, hey, Ricky, hey, Robin, what would an extra $200,000 do for you in the next 15 years? What could that pay for? You have 3 kids, 9th grade, 6th grade, 3rd grade, if I recall correctly. Their college funds will be set up, okay, just by utilizing your mortgage properly and taking into account, hey, what's the best way for me to pay this home off faster and save me and my family the most amount of money? So it's a fantastic program. I'll set you up. I'll have everything set up for you. You don't have to worry about anything. Basically, that's what I believe to be the best thing. And most people, to be frank with you, don't even know about a biweekly. And the reason banks don't tell you that, to be frank with you, is they want your interest. They want that money, So my job as a mortgage planner is to protect my client and to provide them with a loan that's going to be not just in the short term, but in the long term, what's going to save you the most amount of money and what's going to free up the most amount of cash for you. Okay, so I like to reflect at this point and just make sure that we've hit all our goals and make sure that we've found a couple of different options to make sure that the new loan that we're providing for you does make sense and, more importantly, does enable you to do everything that you want. We're looking to save money. We've done that. We're looking for a lower interest rate. Done that. We're looking to pay off the credit card debt. We've done that, and obviously we've combined both loans. to be honest with you guys, business and in life, integrity to me is very important. Anyone could sit here and tell you that they're going to do this and tell you they're going to do that, but the fact of the matter is, there are very few people that I've learned, and I've been in financial advisor for many years. I've been a mortgage planner for 12 years, and very few people that I've come across in life do what they say they're going to do. So I just want you to know that. If you don't want any surprises, you don't want anything changing at the last minute, then I'm the type of guy you want to work with. I've been very blessed and very privileged to have closed, thousands of loans in my career. And the one thing I can promise you guys is I will be here for you 24/7. Okay, you have a question on a Sunday night, on a weekend, any day, any night, I'm here for you. Okay, you're going to have my personal cell phone number. You have my office number. Yes, I have two young kids, but if I don't pick up the phone, if I'm tied up changing diapers or whatever the case may be, I'll always get back to you within a few hours of your phone call. So I want to thank you again for the opportunity to serve you. And what's important to me is building relationships. Sure, I want to close this loan for you. Sure, I want to help you. But even more importantly than that, I want to build a relationship with you that lasts for years to come. I want you to know you have someone you can trust. You have someone you can count on. And your friends, your colleagues, your family, all those people that may need help or may need assistance, you won't even think twice to refer them to me. So it's a win-win for everyone. I gain your trust. I gain your friends, your relationships. Hey, we live very close. Maybe we can get together in the summer, have a couple barbecues together. But I really am looking forward to working with you. And again, I thank you for the opportunity. So review the options. Get back to me tonight. Get back to me tomorrow. If you have any questions, I'll be happy to answer them. And we can start to get the ball rolling on this and start to save you money immediately. Thanks again, guys.